Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be leading the session. As we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen OK. Just waiting for a couple more responses to make sure everyone's up and running OK. Just type OK in the chat box if you're hearing me clearly. All right, great. I've got enough responses now. Looks like we're up and running fine. If anyone runs into any issues as we go along, please let me know. Happy holidays to everybody. Hope you're ready for the long weekend and the new year coming in soon next week. And obviously also ready for the big movements in the markets that are probably coming. So let's get moving. We'll take a look at some of the fundamentals, and then we'll take a look at the technical analysis that goes along with it. As always, keep in mind, no one trade is guaranteed to profit. With each and every trade you make, there is a risk of having a loss. So it's not a question of whether on occasion you'll have losses on trades. It's a question of how much of a loss might you have on some trades. So you want to manage your risk in a way that makes sense, understanding that you're not going to be right with each and every move that you make. So whether that's with stop loss marks, hedge positions, or maybe using AvaProtect, which is a nice feature that's found on our web trader platform and on the AvaTrade Go mobile app for protecting against losses, which we'll go over that briefly to show how that works. But in some way, you should be managing your risk in a way that makes sense for you. Keep in mind that what we cover is not to be taken as financial advisement, but is coming from an educational perspective. Now, in terms of the technical analysis, we basically are looking at the historical movements on the charts. That's what technical analysis is. So if you're brand new to things, it's not real complex. It's looking for patterns, repetitive movements, trends that you think create predictable entry points and exit points in a way that makes sense to you. And so in general, we'll be looking for price levels, support, resistance. We'll be looking for trends, opportunistic entry points and exit points. That's the technical analysis that we'll be doing. You can use indicators to assist with that. I tend to do things more manually, but indicators can be helpful. You should be smarter than the indicator, though, because not only can you look back at the historical movements on the chart, the same as the indicators do, but you can pay attention to what's happening fundamentally as well and decide which price levels you trust and which ones you don't, based on which way the wind is blowing with the fundamentals. And so we'll take a quick look at the fundamentals here in a moment and then jump on the charts for our technical analysis. Thank you, Natalie. Merry Christmas to you as well. Let's take a look then quickly at some fundamental news. And before we do that, we'll take a peek at a couple things that I think are important. One is you'll find our holiday trading hours here on our website. So if you go to trading info, and some of you may be with us from Canada or other areas around the world, and maybe you have a little bit different layout on the website. But in general, you'll find the same information. So trading info, holiday hours. And so as we go to the holiday hours page, go down and click here for this month's holiday hours. And so here they are. You'll see there's an early close on some of the days. Let's get to, looks like it's not updated. I'm looking at November holidays. Apologies for that. I checked from another system and it was updated. Hopefully it's updated when you log in. I think maybe I'm on a server that didn't update things. But what you'll see is you should find the holiday hours here. Okay, trading info, holiday hours, and click here for the updated hours. And I think it should be updated from your locations. In general, today you see early close on the markets, so pay attention to that. Markets will not go as late as usual today, and pretty much all of the assets are closed except I think with the exception of cryptocurrencies for the whole trading day tomorrow, and then opened back up normal on Monday. So it'll be a long weekend, early close today. Most all assets close tomorrow and through the weekend, and not open back up till Monday. So if you're carrying trades through the weekend, which would include Friday this week and the late half of today, keep in mind the potential for large gaps on assets that could be affected by the U.S. political situation. So if you're not aware of what's going on in the U.S., you've got Trump putting his foot down with this big COVID stimulus, $1 trillion stimulus package, saying he's not going to sign it with all the special add-ons that are in the stimulus package that really have nothing to do with stimulus for COVID. So as politicians do, they tried to get their wish lists added on to the stimulus package with funding for, arts centers and all kinds of non-COVID related items. And so some of them maybe are paybacks to some of their donors, who knows? So the president saw the list of items on the quote unquote COVID stimulus package and said, I'm not signing it. And so he says he wants more stimulus for the U.S. Small businesses and for U.S. citizens, like 2,000 per citizen instead of 600, and more money going to the small businesses for the COVID relief. And he doesn't want any money going to special interests and foreign entities, et cetera, as special wish lists from some of the politicians. So we'll see what happens with that. We could see huge swings in gold, huge swings in indices. And I would say not just U.S. indices, but specifically U.S. indices will be affected by this whole situation. And this may carry right through the weekend, and you may get a result over the weekend, causing a huge gap potentially on the NASDAQ, S&P, Dow Jones, gold, oil, etc. So you may think about, unless you're in long-term moves with stop losses that are quite a distance away, you may think about closing out and reopening after the weekend if you don't like that uncertainty going through the weekend. The difference could be from a bill being signed, a stimulus package being signed, or completely rejected, which are two opposite poles of either bearish or bullish pressure that could occur through the weekend on major assets. So keep that in mind. As you're on our platform, you also see the different trading platforms that we offer, or as you're on our website, I should say, you see the different trading platforms that are offered. AvaTrade Go is our custom-made mobile app. For those of you that are not familiar with it, it trades right on your MT4 and MT5 accounts. So those of you that are in the webinar and are new to things, you may check out the mobile app if you haven't yet. It has special features. The order window acts as a trade calculator, so it tells you your margin requirement. It calculates if you put a take profit or stop loss price. It calculates your exposure and potential profit converted to your account currency before you ever place the trade, based on the trade size and your stop loss and take profit prices. It's very useful for risk management, so you know what you're getting into before you ever buy or sell. And you also can protect against loss for a small premium charge for defined time periods as well on gold, silver, and FX pairings. So very nice features. You'll also see those features if you log in from our main website. You'll be in the web trader platform. Those of you who've been with AvaTrade for a while, before the web trader was built, you may see when you log in from our main website, it might just take you directly to the client area. If that's the case, ask for the web trader to be added to your user account so that when you log in, you see the web trader platform. You can expand the chart. It has a lot of nice features. You can go full screen with the chart. You can add your indicators. Everything's here. It's a fully functional system. You can draw lines on the chart, etc. It also has nice features in terms of making a favorites list, or looking at most rising, most falling, most buying, most selling, or by category, European stocks, commodities, etc. So it's a very useful, user-friendly platform, and it trades right on your MT4 and MT5 accounts. So very nice. Declan, you're trading on copper, okay? And you're saying it's up slightly. It could, the precious metals and copper, you could see rise rapidly if a trade deal goes through for two different reasons, right? Copper, or not a trade deal, I'm sorry, if the stimulus package goes through in the US for two different reasons. Copper tends to rise as business does good because copper's used a lot in industry, copper wiring, etc. So copper tends to rise if there's free money going out in stimulus, that can drive copper up, right? And the opposite, if Trump kills the stimulus package and vetoes it, and there's infighting between the left and the right in the U.S., you could see bearish pressure on an asset like copper. And then the precious metals, gold, etc. Why would gold rise when that's a positive for the economy, that the stimulus? And the answer is many times, not always, but many times gold will rise because of inflation. And certainly printing $1 trillion in US dollars and handing it out can cause the USD to weaken. So $1 trillion in stimulus could weaken the USD. That's considered inflation, and that can drive gold up. Okay. Declan, holding silver over the weekend, like I said as we were opening, it could be a risk, right? It depends how far down. If you're buying on silver, how far down is your stop loss, right? If your stop loss is just a few dollars or a few points down, right? Not so far away, and you've taken maybe a large position, so maybe you have a high exposure in a small distance. If that was the situation, then that's a risk carrying it through the weekend, because if it goes against you, it could gap past your stop loss and wipe out your entire account. Now, if it's a low exposure position and your stop loss is a long distance away, then it's less of a risk carrying it through the weekend. So it depends how aggressive you were with the position, how long term are you in it for the position, etc. Okay. Yeah, the euro amount to your stop loss doesn't mean as much to me unless I also understand the size of your balance. So it's not about the actual euro amount or dollar amount value of your exposure, but what's the percent exposure on your account and how much room do you have to spare, right? How much room do you have to spare in case it gaps past your stop loss, which could happen if the stop loss is relatively close. So you just have to be careful with short stops over the weekend because it could go past what you're wanting. All right, so on this platform, if we're trading on something that has AvaProtect available, like gold, okay, let's say you're maybe selling on gold for whatever reason. Lately, I've been using buy on gold as an example. So I'm just to be even, I'm going to say, let's pretend we were selling on gold. Maybe you expect a pullback before a larger rise, something like that with the bickering that's going on in Washington, D.C. So maybe you say, I want my trade size to be 10 ounces. Okay. And perhaps I think my stop loss should be 1901. Maybe I think if it goes past 1900, then I give up and maybe it's up and rising, right? Which could happen. So I say if it goes to 1901, I give up on my sell. Then the uptrend has established itself, right? And I give up. And so then I look and I say, ooh, see how the platform tells you your possible loss. Possible loss, 265. I look at my balance and I say, oh, I only have about 2,000 in my balance. That's over 10% risk, right? So this is the web trader platform, Roman, correct? This is the web trader. We're also going to look at the MT4 platform, and maybe that's what you saw as well. Okay, so so you see it calculated my exposure in my account currency, which happens to be USD. And so I might look and say, ooh, that's too big of a trade size. I don't want to risk over 10%. So maybe I go down and I say, okay, maybe 4 ounces. Now I'm risking about 5% of my balance, right? Maybe I say, okay, I'm comfortable with that with my move. or maybe I want less and I adjust the trade size. So now I know to my preferred stop loss, I'm risking what I want based on the trade size and the stop loss distance. The web trader helped calculate that for me. Now I put my take profit. Maybe I think it's going to drop to 1850. Okay. So if I think it could drop to 1850 or maybe 1855, now I say, okay, potential profit 81, potential loss 102. Okay, almost 1-to-1 ratio. Maybe I say, you know what, I want to go after more. I want to have potential profit greater. Maybe I believe it could drop to 1800. Okay, now I have a 3-to-1 ratio. 300 possible profit to 100 possible loss. Or you could be going in the opposite direction, right? Just a simulation. So you see it's making it foolproof. You know what your possible profit is. You know what your possible loss is to your stop loss, etc. Now, maybe you say, you know what? There's a lot of volatility now. I prefer not to do a stop loss. I prefer to use AvaProtect. Maybe I'll do 2 days coverage to get through some of this infighting in Washington, D.C. And maybe I believe I could have a huge move up and down. And so even if it goes in my sell position example, even if it goes up for the next 2 days, I'm only risking $34. That's the cost of the protection for 2 days. If this 2 days ends and it went $100 an ounce the wrong way and I'm down $400, $500, I get that paid back when the protection ends. And I only had to pay $34.14 in this example for that protection. And if it goes the right way, I could make over 300 to this take profit. So look at that. That's almost a 10-to-1 difference. Maybe I'm better off over the next 2 days using AvaProtect rather than a stop loss. Okay, so this is the flexibility that the AvaTrade Go app and the web trader platform give you with your risk management. Very, very useful. Okay. Moen, no, I'm just making sure you understand how to use the platform. So if you don't prefer to watch this part of the webinar, you're free to sign out. It's no problem. We'll be getting onto the live chart soon. So what you view as an advertisement maybe is viewed more as useful risk management help by most folks. Okay. All right. So as we go into the Trading Central feature of the platform, what you will see is you have technical analysis on this platform for you. And since this is a technical analysis webinar, it's certainly pertinent to look at what it offers you. And so we've got under analyst views, and this is only on live accounts, so you have to have a live account for this to be active. The analyst views give you live signals, okay? And so you've got technical analysis on all of these different assets outlined for you, okay? These are updated through the day, and you see where the price levels are, where the breakout move is expected to go. It gives you all the details of the preferred direction, the entry, exit prices. All of the information is here for the signal, and these signals are free for you. All of the technical analysis is there, okay? And so that's available to all live accounts, regardless of your balance size. Now, you also have Market Buzz. This is fundamental news, and you can check it out on your own time. Whatever asset is trending the most in the stories are the biggest bubbles. And if you click on the bubbles, you have a link that takes you to the fundamental news stories, okay? And the most recent ones are first. You can click on the stories. It'll take you to the website that has that information. So any questions on any of that, let me know. Yes, Natalie, regardless if the move gaps against you, if you have AvaProtect initiated and it gaps against you no matter how far, as long as the covered time period is still running, you're protected against all of that loss during that covered time period. Very good question. So let's take a look at the live movements on the MT4 here in a moment. We see the main headlines to get an idea of what direction you might prefer to trade. European stocks, happy right now due to Brexit negotiations. Okay. Brexit negotiations look like they're going well. Looks like there's going to be a deal, and there's a lot of optimism on the markets. You can also see with a quick snapshot here, the futures are green in the US as well. Volatility is down over 3.5%, the VIX volatility index. So fear is down. US dollar is weakening, meaning probably there's an expected stimulus deal, right? US dollar keeps dropping, meaning they're probably ready for that printed money to be handed out. Okay, so you can see which way the wind is blowing. Some positive optimism on the markets in the headline and in the futures being green and the volatility index being down. Here's another headline, another source, same idea. Brexit deal anticipation fuels stocks and the pound and the sterling. Another headline, European stocks extend rally as Brexit deal all but certain. Okay, those are all positive news headlines. Economic calendar, you see it's a holiday in a lot of places. Okay, a bank holiday in a lot of places around the world. And then tomorrow, for sure, even more bank holidays. Okay, the US actually is open and running, and there's some announcements coming later today that could move things a bit on the markets. So let's go ahead, let's take a look at the live movements and get into the technical analysis. So right now I've got the Australian USD running. So the Australian USD is fueled by a couple things right now. Okay, when there's positive economic news. Ernest, good question. Fundamental analysis is typically looking at the news, the headlines. Technical analysis is looking at the historical movements on the chart, which is what we're about to do. Good question. So, and by the way, we do a webinar that focuses a bit more on fundamental analysis as well. So the technical analysis shows us on the 1 hour candles for the Australian dollar, a couple interesting things. You see a resistance line here, okay, resistance line here. So the price gapped down on the 18th, okay? About a week ago, the price gapped down at open, okay? That was from Friday's close to Monday's open, I believe, and you see it gap down, okay? There's a gap in the price. Since then, the bottom of that gap has acted as resistance, which many times it does. Whatever caused it to gap down here, that news still exists, so it creates resistance to go any higher. So you see it tested once and dropped, tested twice and dropped, tested a third time, and that's where we are right now. So a technical strategy you could have already used was when it returned to the bottom of this gap, sell. You would have had one winner already, okay? Once it returned to the bottom of the gap again, you guessed it, the technical strategy says sell. Now it's a little bit different now because we've got this possible stimulus deal, right? And we're going into a really long weekend, an early close today and no trading tomorrow, and then Saturday, Sunday, and not till Monday does it open. But in the short term, I believe there's more headbutting and bickering that could potentially happen in Washington, D.C. about this stimulus deal. I think that could cause the USD to strengthen. The idea that, hey, maybe they're not going to print $1 million in stimulus just yet and hand it out. So maybe that causes the USD to strengthen, pulling down off this resistance. The Australian, pulling the Australian down. So you could do this for limited risk, right? Sell off of this resistance, right? Then where does it make sense, technically speaking, to put your stop loss? If you're selling off of this, just playing the technical analysis and saying, look at this resistance level. Look what happened last time. Maybe it happens again. So you take your shot. Maybe you have a potential profit at the first support level down here, okay? You see here it hit and went up. So that's a support level. The price couldn't break it, and up it went. So maybe your potential profit is to here, and your risk is just above the resistance. Small risk, much larger potential reward. Okay? All it would take to crash the Australian against the USD would be doubts about the stimulus, that maybe it's just not going to get passed. That could potentially strengthen the USD and drive the Australian down. Okay, so why am I looking at the Australian? A couple reasons. One is that's a nice resistance level underneath a big gap. So that's a nice resistance level, technically speaking. And secondly, Australia is a big seller to China as a large economy in the world. And China and the US economies are strongly tied together. So, you know, what's bad for the US economy many times is also bad for the Chinese economy. If you've ever heard the phrase, you know, when the US sneezes, the whole world catches a cold. Okay, economically speaking, that happens a lot of times. So the Australian dollar, many times, if China and the US are doing bad, many times the Australian dollar drops because they're a major, they sell a lot of exports to China. Australia does. So if something's bad for the Chinese economy and the US economy, the Australian dollar many times drops. Okay, so not passing the stimulus deal, fear about the stimulus deal could drive the Australian to weaken and the USD to strengthen at the same time. So that's why I'm looking at this pairing of AUD USD. Okay, so stop loss could be up here at 76.07 or so. So stop loss 76.07. Take profit could be down here, maybe 75.25. And I better get my 76 on the right side of the decimal, huh? Okay, 76.07. Now I think we have it right. There we are. Okay, so stop loss now is just below this red line that I drew. Okay, there, you see the dotted line? There's my stop loss. Maybe I get rid of this line so I can see my stop loss line. And you see you can drag it around to get it in the spot you like. And there it is. So I've put it just above this wick right here. Okay, put my stop loss above that wick. If it breaks above the wick, then maybe it's going to fill the entire gap all the way up. So I put my stop loss here. I'm risking this distance for a potential profit of about what, 5 times, 5-to-1 ratio or so potential profit to risk. So hey, you don't have to win all of these to make a nice profit, and the potential, and that's what trading is about. The potential is there for what's going on in the fundamental news for a huge pullback here. The potential is there. Okay. Yeah, walk us once a movement gets up into the gap beyond the fake breakthroughs. Once a movement gets into a gap, and technically the gap starts at the top of this wick. Once it gets up here, you see that it might fill the entire gap. Okay, so the gap starts somewhere in this gray area here, either the top of the candle or the top of the wick, somewhere in this range. As it gets up in there, you might expect further movement. So not only can you have your stop loss up here, but what kind of pending order could we put that if the movement does hit that stop loss, then you buy? If the movement breaks up in this zone, you could have a buy stop pending order ready to go. Because then you'd say, oh, the news must have been good for the Australian. Maybe they signed the deal. The USD should weaken then, and the Australian should strengthen. So if it breaks into this gap up here, you could have a buy stop ready to go. Okay, so I could say 0.7607. I will also do a pending order. So if my sell gets stopped out, I'll do a buy stop, which buys from a higher point. And I could say 0.7607. 7607. Then I'm buying. Again, it didn't put my decimal. 7607 as an entry to buy. Stop loss then would be back down 7590 maybe. And my take profit could be up here at the top of the gap somewhere, 7622. Okay, so there's my pending order. If it does break through and hit this price up here above my stop loss, then I'm buying and taking a scalp. And with that, it's about an equal risk, a little bit more risk to potential profit. But by being that far into the gap, by being that far into the gap, before you enter on your trade, you're avoiding some false signals that could break into the gap and then reverse. Okay. All right. Any questions on that, let me know. Looks like that resistance level is trying to hold right now as we see the Australian dollar pushing down off of it. Okay. Some scalpers will just wait for a small move and take profit right away when it pushes down off the resistance. Just in and out, in and out. It might do that 10 times. Hit, drop, hit, drop, hit, drop before it ever breaks through, if it's going to break through. Okay. I also want to show the NASDAQ. I think it sets up nice, technically speaking. If we look at the NASDAQ right now and we go to, this is 1 hour candles. We see a nice support level here, support, support, support. Hits again and goes up, support, tested it, and back up, and now it's sideways. You see that? NASDAQ is sideways. It does not know which way to go. If a stimulus deal is either officially signed or officially vetoed before the trading day ends today, you could see either a run up to the resistance or a breaking of the support. Okay? One or the other could happen. So you could have, here's a resistance level here. You could have a pending buy stop up here, ready to go. And you could have a pending sell stop down here, ready to go. So if the price breaks up to here, clearing this little resistance level here, buy stop at this price could activate to go to the resistance as a take profit with a stop loss just back below there. And if the movement breaks below this more major support level, then a sell stop could enter at a price down here, ready for a drop with a take profit at the next support level way down here. Okay, so the potential is there for a breakout move up or a more major breakout move down if it breaks to this price level down here. So you could set up some pending orders, buy stop, sell stop, not trying to guess whether the stimulus deal in the US will be signed, but preparing for either case, a breakthrough up or a breakthrough down, knowing that there could be an impetus for a large move soon. Okay, so pending buy stop, pending sell stop. All right. We can take a look at gold as well. I think it's very interesting to see. Some of you are requesting gold, so let's have a look. You can see gold right now is having some pressure. It reached resistance on the 1 hour candles here. Okay, and let me get rid of some of these lines I drew. They can become confusing. Okay, so as we look here, we see resistance. Okay, and why is it not climbing further? Because the stimulus deal is in question, right? The stimulus deal is in question because of the bickering between the House, the Senate, and the President in the US about this stimulus deal. So a buy stop pending order somewhere up here. If you see a breakthrough of this resistance and it gets to a price level up here, the next resistance level on the 1 hour candles is up around 100, just above. Okay, so a buy stop pending order to get in somewhere in this range, if it breaks the resistance, to buy from say 1885, 1886, then it would have cleared the resistance and it might be up and running to the next resistance level. So a buy stop pending order up here could make sense. And right now it's already below this resistance. So you could go with a market sell on gold, right? A market sell on gold with your stop loss up here. If it breaks above the resistance, you're out. So 1887, something like that. So I could put a stop loss at 1887. I don't like the entry point exactly on this. I would have rather have gotten in closer to the resistance, but it's just a simulation. And take profit at the next support level. That's about 1858, 1860. Let's say 1859. Okay, so my potential profit is a bit more than my risk. Okay, and so if gold pushes down to the next support level, I've got a nice profit. It takes some big news to break this resistance up here to hit my stop loss. Right now, it's pushing down off the resistance, so that's the direction on the market move, technically speaking, that could make sense. You also could put a pending order up closer to the resistance as a sell limit, that if it pushes back up, then you might sell. That's if you're being more patient with it, right? Anankana, if you have any specific questions, feel free to ask. I'm happy to repeat anything we've gone over. Okay, so that's what gold looks like. Why would gold be dropping now? Because they didn't pass the stimulus. Less inflation on the USD, less weakening of the USD. If the stimulus looks like it's in doubt, that strengthens potentially the USD, lessens inflation, and so down goes gold. If the stimulus deal is passed, you might have a buy stop order up here getting activated pretty quickly. Okay, so you don't have to guess whether it'll be passed. You can use a pending order up here and wait and see if there's enough momentum to break that resistance. Then it triggers your buy position. Okay. Tesla. I've had some requests about Tesla. Now, you can't trade on Tesla yet. The US market is not open, but we can take a look at it.
Hello.
I think Tesla's maybe up here at the top.
How is this? How are you, man? Good, good. How's that?
Tesla's hiding on me. We'll find it.
How's the AvaTrade account coming along?
There it is. Okay. So what's happening with Tesla? And let me get rid of some of these lines. Just deleting the objects from the objects list. There we are. All right, so what we see with Tesla here, it reached that resistance level now and looks like it's breaking it. You see this was resistance and down, and then it became support and up. And then once it broke, resistance again. You see it hit and dropped, hit and dropped, and now it's just trying to break above it. Okay, so if it breaks through this level, the next major resistance level is up here. Okay, so buy stop orders somewhere here could make sense. However, remember, we've got the long weekend coming. If over the weekend the stimulus gets passed in the US and it's signed and all the stocks gap up at the open Sunday night / Monday morning, if you had a buy stop entry, let's say here, and the price opens up here Monday morning, guess what? You don't get this price. You get the first available price on your buy stop. Your entry price would be way up here, right? So you have to be careful about pending orders that run through the weekend. If you put a buy stop and you want your entry here, and it goes to where the market closes, and then a deal is passed, and the markets, if they respond positive to that, when the markets open Monday, you could see a big gap and your entry price could actually be higher than you wanted. Okay, that's how that would work. In that case, the gap would work against you. So if you feel Tesla is breaking this resistance and that there's going to be a stimulus deal signed eventually, which there probably will be eventually, then you might just do a market move on Tesla when the market opens today. Look at where the price is when the market opens, and maybe you feel like buying on Tesla before the market closes today is the thing to do, because likely there will eventually be a stimulus passed in the US. So that could work in the favor of US stocks going up. Okay, so that's my take on Tesla. Be careful with the gapping over the weekend with pending orders and even market moves that are running, because it could gap against you if things don't go good over the weekend. Okay. Let's have a look then, maybe at oil, and I think we'll call it quits for the day. I know there are some requests for some other assets. Oil is a big one that has been requested, so we'll look at that, and then we're about out of time, unfortunately. So we see oil is trending down. Why? Same reason gold was pushing down. USD is strengthening a bit. There's a bit of fear that maybe the US is not going to pass a stimulus, and down goes oil. I think odds are they will pass a stimulus eventually, and that'll put bullish pressure back into oil and maybe help drive oil back up. So the lower oil gets, you could view that as an opportunistic entry point, maybe to buy on oil if you think a stimulus deal in the US could drive oil back up. Okay, so combining the technicals with the fundamentals. Right now, this is a downtrend on oil. The technicals say it broke the support level, so sell on oil. That's the technical analysis right now. Here was the support level. It broke it just an hour ago, and we're just below that broken support. So that looks like a downtrend that you could sell on oil currently. The bigger picture, I think oil could break back above that resistance, and a buy position could be in order with resistance up here. Okay, so short-term look on oil, it's a downtrend. Maybe technicals say sell. Longer-term view, if you can catch a low point and the stimulus passes, you could see oil rise. And so longer-term view could be bullish, as the shorter-term view right this second is downtrend. So technicals say sell now, maybe buy later. Okay. Anybody who wants an account manager or anything like that, you could go ahead and contact support and make a request. Okay. There's been some questions about that, so that's why I'm addressing that. That's pretty much it. I think this is a good spot to stop. Keep an eye on the news. Certainly the Brexit situation, with that stimulus being signed, take a look at the pound against the yen. That could be big for you. It could be a lot of bullish movement with the pound and with the euro, both paired against the yen, with a Brexit deal potentially being signed, and it looks like there's belief that for sure it could be. So look for entry points with the pound and the euro, and I think we'll see big movement in the US indices and stocks, as well as gold and oil. Okay. All right, everybody. Happy holidays, Merry Christmas, and Happy New Year next week as well. All right, everybody. Bye for now. Take care.